Hi there, I'm Dean Heskin. Thanks for tuning in to our podcast, The Secret War on Cash. I have with me my co-host, Chris Agelastos. Chris, good morning to you.
Good morning.
Well, we're actually here in Phoenix today, and everybody always asks us when you're calling Arizona in the summer months, what's the temperature like? We actually have some mild temperatures right now. It's really relatively pleasant for, end of June, if you will. So hopefully the rest of the month of June stays at least this pleasant or close to it. Although June's going to be over here in a flash. So
No kidding.
all right, well, let's talk about cash. Let's see, Daily Huddle here. This is a little bit of some concern, but not a surprise. U.S. dollar now effectively replaced as world's reserve currency by this asset, according to Black Swan author Nassim Taleb. Taleb? I think it's Taleb. Okay, so not good. The U.S. dollar is being replaced. And, Chris, in fact, just a few days ago, a couple of days ago, this was my 33rd year here at Swiss America. And prior to this, dealt in securities business, investment banking, have dealt in insurance. And so I've had some exposure to the markets and working with investments and things of this nature. This to me was very interesting and it really screams as to just how much things have changed in the financial world. And what I mean, and I'll let you talk about this, but spoiler alert here, what people are replacing the dollar with in terms of an alternative asset is stocks. And that's the main thing he's hitting on here. And the interesting thing about that is like the simple rule always was, okay, if you want to keep things the safest, you keep it in cash, keep it in the dollar. You want to get a little bit of growth, get a little bit of appreciation, then you get into the stock markets. Now the script is flipped, and it really hasn't, because you still have oodles of exposure when you're in the stock market. But the fact that people would look at a stock as being more stable or more secure than our currency, that's frightening.
Yeah. Right. Well, that's the thing here. It's just the dollar used to be much more reliable. You could count on it to hold its value better than we've been able to the last, certainly the last 10 years, but really even going back 20, 25 years now. And the reason I think people are turning to the stock market is not because it's less risky. It's in fact probably quite a bit more risky, but at least they have a chance of earning some growth to offset the value of their dollars that have been falling. So if your two options are stay in the dollar and lose 10% this year, or take some risk in the stock market but maybe gain 10 or 20%, or maybe even more if you do really well, then I can kind of see why people are going that way, And then what he also points to in here that that's what people are really doing, is getting into the stock market to get some of that growth. And even though they're doing transactions, in the dollar, in the world market, a lot of people are then parking their reserve money into physical gold. So more so using gold as the safe haven, and using the stock market to offset the loss that they're taking from the devaluation of the dollar.
Well, there's so many different things about this, though. Like, as I read this and I was thinking about it, I remember years ago hearing that phrase or expression by Will Rogers, where he said, "I'm not so concerned about the return on my investment, but the return of my investment." And like in this case, if a person took $10,000 and they have it in the bank, yes, there's inflation and the value of that currency is dropping, but at the end of the day, that 10,000 remains there. And part of it, there's been a lot of talks by Bloomberg, by Goldman Sachs, by major investment firms that talking about the potential for, real problems with the dollar. Some would even say an out-and-out collapse. And the bottom line is if something like that happens with the dollar, your stocks only have value as it can be converted back into dollars. So if something happens to the dollar, something is going to happen to your stocks. And that's, you mentioned gold, and they talk about that in this article here, where, the advantage to what's happening is they're all transacting in various currencies and so forth, but they're pretty quickly converting that back into gold. And the key with gold unlike stocks, is like they don't depend. Gold does not depend upon the dollar to give it value. As we sit here
Right.
talking today, gold has value in yen, euro, mark, lira, pound. That's where the strength comes from. So I mean, I do understand the concept of why people would be doing what they're doing, and even as you explained, it makes perfect sense in on some level. But at the end of
Mhm.
the day, I think it's still putting people in a very compromised position. And that's where, for those
Yeah.
tuning in, if you want to learn more about gold, contact our office. Call 1-800-289-2646, or you can text that. Again, that's 1-800-289-2646. Or you can also visit us online at swissamerica.com, and you'll see the number in that web in the show description here. So moving on to this next article, Chris, also not really good. Survey shows global faith in the U.S. dollar is crumbling, and it's true. I mean, now this is Bloomberg. Bloomberg
Mhm.
did their own little survey on things, and of like, I think it was 251 respondents or something to that
Yeah.
effect. There was like roughly half of them still had confidence in the dollar.
Yeah.
But what I found interesting is you get down to the end of the article here, Chris. They're talking about how right now the dollar is losing ground or losing value to the tune of like almost 10%, like 9.5% a year.
Mhm.
And at the current rate in this trajectory, in barely over 30 years, it will be worthless. And
Yeah.
that's assuming it just maintains this 9.5 per year descent, which
Right.
they're saying in this article, that's not going to happen. In fact, says, but it won't. And
Yeah.
so we've talked about this, like the dollar, yes, it looks like it's in trouble. It looks like there's some problems. You know, I think we could be looking at potentially, I would be surprised that they're saying 32 years if it was half that amount of time before something happens.
Right. Yeah, and that's what they really highlight here is in the survey, like you said, about half the people have lost faith in the dollar, and once that gets probably over 65-70%, that's when things really speed up, right? And so that's what they're saying here is if things only stay the way they are, we could make it 32 years, but obviously more and more people are becoming aware of what's happening with the dollar. I mean, even in this article, they quote Goldman Sachs. We
Right.
expect further dollar weakness. Investco, a weaker dollar is here to stay. This other gentleman, Greg Manarino, is the one that put the charts together and the stats on an optimistic view that potentially we could make it 32 years. So these are not fly by night organizations. These are not people that just carelessly throw phrases out there, right? These are big investment groups that people trust with their retirement savings and their future, and even they're telling people the dollar is in trouble and its days are numbered. So it could really speed up fast, and it's a type of thing that I mean we've seen over the years in other countries when their currencies fail. You can go from a relative position of I don't want to say strength, but where you're just getting by and things are okay, to complete collapse in even just a year or two. And so this is why it's the same reason you keep bottled water and maybe some canned food and some supplies in your house for an emergency. I think this is why you need to make sure that you have a good portion of your savings in physical assets like gold and silver. In real estate, most people have that own their home maybe have some equity and have some value in that home. Things that aren't going to just disappear one day when people lose faith in them. Because really, what the main thing the dollar has going for it right now is that half the crowd still believes in it. But
Right.
I know, 20 plus years ago when you and I were younger, if they would have taken that same survey, I bet you 95% or higher of the people would have had faith in the dollar. So a lot has changed in a relatively short amount of time, and it's only going to speed up from here.
Right. Well, and let's keep in mind, you've got the really, I'll call it somewhat of the X factor. You've got BRICS, who is actively, let's say even aggressively, embarking on their de-dollarization campaign.
Mhm.
And that's, to your earlier point, that 9.5 per year descent is assuming kind of the status quo. Well, there's no status quo. I mean, you've got BRICS out there recruiting like the Dickens, getting these nations on board, and you find enough of that, they're creating enough of a wave that eventually that wave could turn into a financial tsunami in terms of, the amount of dollars getting dumped and not being utilized anymore, et cetera. So,
Yeah,
all right. Well,
absolutely.
thanks for sharing that, Chris. And we look forward to talking about this more in the future in a way. I mean, it's not really the best.
Right. Let's hope we can find a positive outcome.
Yeah. Maybe we'll start talking about tacos, the good tacos here in Arizona. Just do a real positive show about tacos one day. All right. For those of you tuning in, thanks for doing so. And if you're not subscribed to this podcast, please do that as well, as we'd love to stay in touch. Have a great rest of your day, great rest of your week, and we'll talk to you real soon.
Take care.